Welcome to Explain the Charts, and today we're analyzing Meta stock, Meta, and diving deep into what the news and the charts are telling us. The stock market is currently experiencing volatility, with investors grappling with the potential impact of rising inflation and interest rates. Meta Platforms Incorporated, known for its social media giants like Facebook, Instagram, and WhatsApp, is a major player in the tech sector, and its stock performance reflects the overall sentiment of the market. Recent news has been mixed, with some analysts expressing bullish sentiments about Meta's future prospects, citing their strong financial position, dominant market share, and continued investments in artificial intelligence, AI, and the metaverse. However, others have raised concerns about the company's high capital expenditures and the potential impact of economic uncertainties on advertising revenue. We will analyze the news and chart data to determine if the bulls or bears are currently in control of Meta. Looking at the daily chart, we see that Meta has been on an upward trend for the past several months, steadily climbing from around the 280 mark to its current price of 525.6, a significant increase. This upward trend is punctuated by several green candles, suggesting strong buying pressure and investor confidence. We see that the price is approaching a new all-time high, near the 544.23 mark, which could act as a strong resistance level, potentially leading to a price pullback or consolidation. However, the recent green candle suggests that buyers are still in control, and the stock could potentially break through the resistance level if the news and market sentiment remain positive. It is important to note that the daily chart is a long-term view of the market, and while it provides an overall picture of the trend, it's essential to consider shorter-term perspectives as well. Now let's take a closer look at the 1-hour chart to gain a better understanding of the short-term price fluctuations. We see a series of smaller green candles indicating sustained buying activity over the past few hours. The price has been consolidating around the 515 to 525 range, suggesting a period of indecision among traders. The most recent green candle shows a strong push upward, indicating that buyers are currently taking control, but it is still too early to say whether this will lead to a sustained breakout or a temporary upward surge. We'll need to monitor the 1-hour chart closely to see how the price reacts to any upcoming news events and market developments. If the bulls maintain their momentum and the price breaks through the 525 resistance level, it could signal a further upward climb, possibly testing the daily chart's all-time high. Conversely, if the price breaks below the 515 support level, it could signal a short-term pullback or correction. To get an even more granular perspective, let's examine the 15-minute chart, which showcases the most recent price movements. We can see that the price has been oscillating around the 520 to 525 range for the past hour, indicating a period of consolidation. This consolidation is likely due to traders waiting for new information and market direction before making significant moves. The most recent 15-minute candles show a slight upward bias, suggesting that buyers are trying to push the price higher. However, the lack of significant volume in this time frame suggests that these movements are relatively minor and may not be indicative of a larger trend. We'll need to monitor the 15-minute chart carefully to see if the price can break through the 525 resistance level. If the price breaks through the 525 resistance and sustains the upward momentum, it could signal a stronger buying pressure and a potential move toward the daily chart's all-time high. Conversely, if the price breaks below the 520 support level, it could signal a short-term correction and potentially a return to the 515 to 518 range. Now, let's revisit the 1-hour chart to explore a particularly interesting range of candles. Specifically, we'll focus on the candles from 1696982400000 to 1696992400000, a period that saw significant price swings and volume. During this period, we can see that the price dropped sharply, likely due to a negative news event that impacted investor sentiment. The bearish sentiment caused a price plunge, breaking through the previously established support level and leading to a sell-off. However, the stock quickly recovered, forming a series of green candles that suggest a rebound and a renewed interest from buyers. This example highlights the importance of analyzing shorter-term charts, as they reveal the impact of immediate market events and sentiment shifts, which can influence the price direction. This sudden drop and subsequent recovery emphasize the dynamic nature of the market and the need to be prepared for unexpected volatility. In conclusion, Meta stock currently presents a complex picture with both bullish and bearish signals. The daily chart suggests a long-term bullish trend, with the price approaching a new all-time high. However, the 1-hour chart shows a period of consolidation and the price is currently hovering near a potential resistance level. The 15-minute chart indicates a short-term upward bias, but low volume suggests these movements are minor. Traders should monitor the charts closely for any signs of a breakout or correction. Key price levels to watch include the 544.23 resistance level on the daily chart, the 525 resistance level on the 1-hour chart, and the 520 support level on the 15-minute chart. A sustained breakout above the resistance levels could signal a strong bullish trend, while a break below the support levels could lead to a short-term correction. The future direction of Meta will likely depend on the release of new information, market sentiment, and overall economic conditions. It's crucial to stay informed about news events and their potential impact on Meta's performance. Remember, this analysis is for informational purposes only and should not be interpreted as investment advice. Always conduct your own thorough research and consult with a qualified financial advisor before making any trading decisions.